Hello and welcome everybody to this weekly market recap for the week ending July 11th, 2025. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com, and it's a pleasure to be with all of you again this weekend. We had kind of a mixed week last week. We're going to talk about some of the action and go over some of the charts with you in just a little bit, but we did see a little bit of a pullback, saw a little bit of rotation, maybe slightly from growth stocks into some value areas and so forth. But we'll go over and talk about some of that in just a minute. In the week ahead, we're going to have earnings season kicking off. We've got JP Morgan and some other banks that will be reporting early this week. We've got the inflation number coming out for June on Tuesday morning before the market opens. So certainly got the potential for some fireworks as we get earnings season started. We've got still a lot of question marks around the tariffs. We've got kind of like a 90-day pause into August as far as some of the tariffs go. But a couple of countries, I think Brazil, Canada, among those that we saw some new tariffs announced last week. So I think the market's a little nervous over that, although the volatility index did go down below 16 last week, which I think is a really good signal that a lot of the fear is coming out of the market. I would just say that a lot of traders and investors maybe have grown a little bit numb to a lot of the news, the headline news that has come out in 2025 about the tariffs, about the possibility of inflation, what the Fed's going to do with interest rates. I just think a lot of folks have seen all of this come and go and the market go to all-time highs. And so at this point, really not impacting a lot of what they do. And at the same time, we've got the VIX suggesting that there's really not a lot of nervousness in the market. So anyhow, with that backdrop, let's take a look and see what happened over the course of the last week. You can see transportation stocks once again. This is, I think, the third time in the last 4 weeks that transportation stocks have been on top of these 6 indices that we've been looking at. And of course, if you're familiar with the market and you've been watching the market over the past few years, you know transportation stocks have not done well. This has been one of the worst areas, one of the worst asset classes to be involved in over the course of the past few years. But transportation stocks seem to be catching a little bit of fire here. And I think, at least for me, a lot of it has to do with the fact that I believe interest rates are going to be cut. And I wouldn't be shocked if they're cut at the next Fed meeting, which is at the end of July, just coming up in a few weeks. Everyone would disagree with me, and I'm probably not right, but I'm just saying I wouldn't be shocked. I think the market is starting to show that they're expecting a rate cut. Even Fed Chief Powell mentioned early last week, that they would have cut rates by now if it weren't for the tariffs. So I don't know. You get another inflation report out this week. If it doesn't show any inflation, maybe the Fed starts to change course a little bit. I don't know. We'll see at the end of the month. Anyhow, transport's leading last week. 5 of the 6 major indices that we're looking at here, though, were down last week. Not much, just fractionally on the S&P 500 and on the NASDAQ 100. Also, the S&P 400 mid cap down about 0.6%. Russell 2000 small cap also right around that neighborhood. The Dow Jones, the laggard last week, dropping about 1%. If we pull up the sectors, take a look at the sectors, you can see we had 5 sectors up, 6 sectors down. Leading the S&P 500 to the upside last week clearly was energy. And then we had utilities, industrials, and materials. To the downside, one of the big reasons the market struggled is that technology lost about 0.4%. Of course, that's 31% of the S&P 500 weighting. So when you get 31% of the market going down, it's going to have a tendency to drag the overall market down. That's what we saw last week. But again, it was just fractional losses. And after all the gains we've seen since that April low, I don't think too many people are complaining about a little bit of a pullback there. Further down, you can see, though, consumer staples getting hit pretty good at 1.7%. And then communication services, 1.9%. And the big loser last week, financials, dropping nearly 2% on the week. S&P 500, looking at the chart, you can see we continue to push to the upside. We do still have a negative divergence technically in play, but will it eliminate as prices continue to move up? Well, I don't know. It's going to take time. We'll have to see whether or not that happens or not. But that's one of the reasons why when I see a negative divergence first print, I don't get overly bearish, because you've got to let these things play out. You've got to let the momentum play out to see whether or not momentum strengthens to the point where we can get rid of these negative divergences or not. At this point, it is still present, but I don't know if this book's been written just yet. Looking at the RSI on a daily basis, you can see up near that 70 level, maybe just below 70. Tells us that the market's a little bit ahead of itself in the near term. Maybe we continue to consolidate a little bit as we get ready for earnings. NASDAQ 100, very similar looking chart again over the past 4 or 5 days. You can see slight move to the downside over this past week, but nothing horrible. We were overbought. RSI was up at 70, just above, and we've kind of pulled back just a little bit on the NASDAQ, with the RSI now sitting at 66. The small cap IWM continuing to push to the upside. I think it looks pretty healthy, although Friday was a pretty weak day for the small caps. Still trading well above its 20-day moving average, and that is the moving average. That's the area that I would watch to the downside on the small caps. Transports, as I mentioned, another very, very strong week, making new highs. And ever since we've made this breakout above about 15,250, 15,300, excuse me, we've seen continuing price action to the upside. And this is a really good signal, and I'll show you why in just a second. Transportation stocks, as I've mentioned before, only go up for one reason. The expectation more goods are going to be shipped. I mean, that's it. There's no mystery to transportation stocks. They either ship more goods or they ship less goods. And when the market is expecting rate cuts, you see a lot of money start to rotate into transports, because when you cut rates, normally you're going to see an expanding economy down the road. And so transports start to get bid up in anticipation for that stronger economy. But check this out. So here you can see on this chart, clearly transports are uptrending. But this is a chart that I like to show, because when transports are uptrending and we're talking about a strengthening economy, we should be thinking higher profits for S&P 500 companies, right? So if you look back throughout history, and this is a 15-year weekly chart on the S&P 500 with the transports down below. But when you go through a period where transports are consolidating or even downtrending, you can see that with red dotted lines here. When we break out of that back to the upside, you can see that the resulting move really buoys the S&P 500. And normally that's when we get our biggest gains in the S&P 500, is after the transports have broken down trends and they begin uptrending. I mean, you can see it pretty clearly on all these. Look at these blue directional lines that I have on the transports. When the transports break these downtrends and they start trending higher, that's when we normally see really good movement to the upside in the S&P 500. And so since October, November of last year, we saw transports top. We had a pretty rough start to the year with the cyclical bear market, and transports were under pressure. But that trend line, that downtrend line, broke probably within the last month or so. And you can see this quarter, since early April, the S&P 500 has rebounded strongly. And that, to me, is no coincidence that we've got the transports going up. And normally that's a really good sign for the S&P 500. So continue to watch the transports. And if they keep pushing to the upside, that's going to be most likely a tailwind for the S&P. Volatility index, as I mentioned, volatility index has been coming down. I talk about this quite a bit. Once we get the VIX to move back below 16, essentially bear markets are over. Now, this particular bear market was over anyway because we had already moved to an all-time high. Once you move back to an all-time high, there is no more bear market. You're done. So, the VIX is just kind of confirming what we've already seen in the price action. I fully expect that we're going to see the VIX maybe down into the lower teens, maybe even down to 10, 12 over the course of the next 6 to 12 months. I wouldn't be surprised. One thing that I take away from this, if you look back going into February, remember when the market topped? You can see that even though the S&P 500 climbed from December to January and then again to February, the volatility index, the VIX, was actually rising. So we were going up in the S&P, but fear was building. Look at what's happening now. Fear is coming out of the market. So this is a much, much more sustainable type of an environment when you've got a VIX that's declining and printing new lows as the S&P 500 goes up and prints new highs. That's the normal relationship. So I really like what's happening with the VIX right now. Now, I wrote an article this weekend. I talked a little bit about growth versus value and the fact that we are sitting right now in a sweet spot historically. This goes back over the last 13 years. So this goes back to 2013 when we saw the S&P 500 break out above the high in 2000 and 2007. To me, that's confirmation that a secular bull market is born. Since that secular bull market was born 13 years ago, I've got a seasonality chart showing you how the IWF performs relative to the IWD. Over the 4 months that we're currently in right now, 4 consecutive months, May, June, July, and August. So we're just into the second week of July right now. So we still got some time to go going forward. But these 4 months, this is when growth stocks do their damage versus value stocks. This is when growth stocks outperform historically. And that's what we've been seeing coming off of that April low. May, June, July, and August. I'll zero in here for you. These 4 months, this is the average outperformance in each of these calendar months over the last 13 years. So growth stocks have been outperforming by an average of 1.5% during May, the same during June, the same during August, and 0.9% in July. So if you add up these 4 months, there's an average outperformance of growth stocks of 5.4% over value stocks over the last 13 years. Now, if you add up all the rest of these years and combine them, I believe it's -7. Let's see, it's plus 0.6. So we got plus 5.4 in just the 4-month period that we're in right now through August. And then all of the other months combined are have seen growth stocks outperform value by 0.6%. So relatively flat. So history, if it's any guide, is telling us that right now is the period where we tend to see growth stocks do their damage versus values. So keep that in mind as we move into earnings season. I think over the course of the next 30 days or so, this will probably be an opportunity for some of these growth stocks to shine. And then at that point, maybe we'll need to reevaluate. Here was the article I just wrote, though. So make sure you go over to StockCharts.com, click on the articles. You can go down under all blogs and you can find my blog, which is Trading Places with Tom Bowley. You can pull up the article. If you don't want to miss any of these articles, right here under follow this blog, put in your email address, hit that submit button. StockCharts does not sell your information to anyone. There's no credit card required. It's a completely free service, but it's really cool because if you subscribe with your email, as soon as I publish an article, it'll get mailed to you. It'll be sent to your email address. That's what StockCharts does at no cost. So if you're wondering when I'm going to post my next article, don't wonder any longer. Make sure you sign up for the blog, follow this blog, type in your email address, hit that submit button, and then as soon as I publish an article, it'll be sent to you. For those of you that are new to Earnings Beats, first of all, welcome. Hopefully you like our shows. You like the articles I write over at StockCharts. But make sure if you do like this video, hit that like button. Subscribe to the channel. That way, anytime we do it, we go live on YouTube, you'll be notified. So make sure that you subscribe and then make sure your notifications are turned on. We'd love to have you. A couple things to think about. When you are over at our website, we got a free 30-day trial. You can start that no-cost trial by hitting that green button right there. We'd love to have you come on board and check us out for 30 days. You'll have to give credit card, but we will let you know at the end of your 30-day period before you're charged. We'll let you know that your 30-day trial is expiring, and we'll give you some deals if you want to continue with your membership, and also obviously give you an opportunity to cancel. If you scroll down, you will see an opportunity where you can sign up for our free newsletter. No credit card required. Name and an email address is all it takes. We put some really good stocks out there for our Earnings Beats Digest subscribers here over the course of the last several weeks. Month of June was just like one big winner after another in terms of the stocks that we were providing. But most importantly, it's an educational piece. What we're trying to teach folks is the way we look at the market, how you can maybe incorporate some things, some trading strategies to hopefully lead to some more success in the stock market. But be sure you scroll down, you check that out, and make sure you sign up. One other thing, you can look in the description of this video, and you will find a link to this page right here where you can sign up for a special video that I've prepared over these past couple of days, where there's an asset class that has started to move to the upside. I believe we're going to gain another 50% by year end, or at least over the next 12 months. Let's call it 6 to 12 months. I think we're going to have a huge move. If you want that video, and it's not just me handing you the asset class, I'm going to explain to you why I think this asset class is going to move so that you can make a decision whether or not you believe me or not. But there's a lot of historical precedents that leads me to believe that this group is ready to absolutely explode to the upside. I think fundamentally, things are going to set up for this group as well. Make sure you get this. This can make a big difference in your performance of your own portfolios in 2025. So name, email address, that's all it takes. Hit get Tom's prediction. I'll make sure you get the video sent to you immediately. So check that out. All right, just a couple more things. First of all, I wanted to mention Bitcoin. All of the cryptos really had a big week last week. Some folks were asking me recently when Bitcoin was up around 110 what I thought. I said short term, I thought it could go to 120. Well, I didn't know it would be this short term. Went up about 10,000 last week. Bitcoin closed at 119,000, or at least that's where it's trading right now, 119,000. But I think there's a bigger move in store here. I think Bitcoin goes higher. I see an uptrend and I see a cup right here with a handle back to that 20-week moving average and then a breakout. This cup measures roughly about 35,000, meaning that now that we've made the breakout at about 110,000, the target would be the breakout level at 110 plus the measurement of 35. That takes us to 145,000. So I think the next step on Bitcoin is going to be to 145,000, which is also good news for stocks, because anytime you have Bitcoin and these cryptos going up, I believe it translates into a risk-on type of market environment. And those are the types of market environments where we see prices rise for stocks. So it looks good there. Copper, wanted to mention a big move in copper last week. President Trump announced a 50% tariff on copper, and copper immediately shot up. You can see the entire commodity was up 8.65% last week. And this is a 5-year weekly chart showing that anything around 5.25, that's where we've struggled on copper. But after the tariff announcement last week, you can see a big, big pop in copper, moving up over $5.60. And we'll see whether or not that continues, but that was a big breakout. Also want to mention silver, maybe on the heels of the copper news, silver making a big push to the upside. We had tops coming in around 34, 35 last October, and then again in March, right before the drop in early April. Well, we've come back up, and those recent tops are now history. We've gone through that 34, 35 area, and last week, silver gaining more than 4% and jumping up over $38. So big, big move in silver as well that I wanted to mention. Finally, I'm going to give you a few stocks. These are mostly stocks coming out of our raised guidance chart list that we give to our members. We update that chart list for our members every week. This first one, McCormick and Company, had a big gap up with earnings last week, and then we saw it pull back, but we're getting really close to a key area of support on McCormick. So I like this stock in the 70, 71 range. It pays a dividend, roughly about a 2.4% dividend yield annually. So you got a little bit there. I think with it being back down close to support, and the long-term chart on McCormick, by the way, you can see had a huge move up. It's normally a pretty steady mover to the upside, but since the pandemic, we've been going sideways for a while. I think this pullback is an opportunity not only to reap the rewards of a decent dividend, almost 2.5% a year, but then also I think we're going to probably resume this uptrend, the long-term uptrend, probably sooner rather than later. So I think McCormick's pretty interesting stock. A couple others I wanted to mention real quick. Delta Airlines reported last week. Not only did they beat on their earnings, they raised their guidance. They upped their dividend by 25%. And you can see a big gap up there. And that was helping to lead the transports last week. Of course, Delta, part of that airline group. Next up, these were a couple of earnings came out. Levi Strauss, in addition to reporting some pretty solid results, also raised guidance. You can see a big breakout there. ENVX, this is a Novix Corp, another one that has broken out. See the volume pouring in on this push to the upside. So I wanted to just mention that. A little overbought in the short term. Guideware, this is one that we had raised guidance or saw raised guidance on back at the beginning of June, and it's made its way all the way back down to gap support. It's going to be an interesting week ahead, I think, for a stock like Guideware. If you see a false breakdown below gap support, maybe a reversal, a hammer, something like that, we might see a bottom print on this one, maybe start to work its way back toward that 260 area. Something to keep in mind. Last couple, YEXT. This was a stock that actually I featured back in June when it came back down to key support right around 785, and it promptly went up about 10% in a week. Well, guess what? Came back down, back to the scene of the crime, right around that 785 level. YEXT is back down to that key gap support level. We'll see if it holds again. And then finally, I wanted to bring up Lumentum Holdings. LITE is the ticker symbol, LITE. I really like what's been going on with the stock. I think it's going to make a run for 100. We want to see that breakout above 100, but I like the pullbacks to the 20-day moving averages that have been holding. So I think this is a stock poised to make a run for about that 100 level, but a breakout above 100. And I think this one could really start to pick up some steam to the upside. So keep an eye on LITE. All right, that is about it for me for this week. I certainly appreciate you tuning in. Again, we got a big inflation report coming up on Tuesday to see whether or not those tariffs are starting to work their way through into the inflation calculation. If not, what the heck does the Fed do? The Fed keeps saying that they're worried about inflation making its way up as a result of the tariffs. But to date, we really haven't seen much of that. So if we get another monthly report without any or very little impact from tariffs, what will the Fed do? They might surprise at the end of the month. I'm just saying, I'm just throwing it out there. We're going to find out together whether or not they cut at the end of the month. But I just think that there is a reasonable chance, probably more of a chance than the market is giving it right now, that we could see a rate cut at the end of this month. And I think Tuesday morning, the CPI will tell us a lot. Also, of course, JP Morgan, many of the banks kicking off earnings season this week. Should be an exciting week. You all have a great week, and I'll be back next week to summarize it and look forward to the week ahead of that. Have a great week ahead, everybody. Happy trading.